Good afternoon. This is Rich Nelson with Allendale, covering the commodity comments here. This is Wednesday, May 18th of 2011 here. As far as outside markets, not much of an influence here today. We did have the U.S. dollar up 9, and crude oil, crude fact rebounded to just about $100 or so, up 287 in the last quote. Both those were not much of a major factor here for today's trade. For grains, we're still focused on the key things which the market is realizing are not going to get fixed, which is certainly weather, and it's both of effects here, which are acreage and also yield as far as this goes. Today's 30-cent higher last trade for July corn. That's not a settlement here just yet. 30 cents higher. Well, we will point out that December corn contract did break its downtrend resistance line. So now we can actually say that corn is in sideways, if not actually a slight uptrend right now for corn. Certainly a big deal as far as that goes. Soybeans up 36 1/4 cents. We will point out that soybeans, while they didn't close below or close above their downtrend, they in fact closed just a few cents away. So that's very close, and maybe get that done here tonight. Wheat, a very good rebound, very good thrust higher, up 55 3/4 cents in the last trade. So certainly all grains, very big gains here today. As I said, our key thing driving us right now is certainly weather here. The fact that the trade is realizing we're going to have trouble planting. Acreage will not be at USDA's hopes. And second, of course, is late plantings do mean low yields in most cases here. So that's another concern we have right now. Helping things out for corn. Right off the bat this morning at 9:30, right at the pit trade open, we did have the Department of Energy say that ethanol production rebounded strongly. In the previous 4 weeks, ethanol production has been kind of mixed to lower. 856,000 barrels per day, up to around 883,000 barrels per day. Today's report showed last week's trade at 900,000 barrels per day, and that puts them back in the normal range that we were at for from January through March. So bottom line is today's ethanol report said it confirmed talk that that slack production in the past few weeks was only due to spring maintenance downtime, those type of issues. As Allendale's contended, there are still no problems yet with margins for ethanol plants. So that certainly was a 180 in psychology that this trade had to realize. A secondary focus, we will point out one group, one private analyst group here in the U.S. suggested that up to 2.7 million acres of USDA's March intended acres will not get planted this year due to this wet weather. So that's even more than Allendale's own estimate of 1.1 million acre decline from the March estimate here. So bottom line is we are having some of the trade and other sources now in the industry are joining us and saying we have some significant production problems lined up for this year. It also eventually, which was a little surprise, the same group said that soybean plantings may drop 1.5 million acres. Up to this point, we'd all been saying, you know what, we're going to see the lower corn acres and a push into soybeans. This group says not only are we not going to have that push, but actually soybeans are just simply not going to get planted. We'll do preventive plant and those type of issues will be taken. So that was a little surprise and also bullish to soybeans. For wheat, one of the key hot spots right now for weather is, of course, the EU. One group suggested that France wheat production this year will be down a large 10% compared to last year. They also suggested that, or another group suggests that total EU production will be down 5% from last year. And keep in mind, USDA suggested on this last week's report that all the non-U.S. wheat producers, so everybody else except the U.S., throughout the world will increase production by 4%. You just can't get that if you don't have EU on board. So that's also a very bullish right now here. So good news for grains. As far as the livestock, exact opposite here. Cattle on June contract down another $1.50 here for the June. Put them some lows of 102.60 for the June contract. That almost reached Allendale's original 106 objective. So after all these many weeks of waiting, looks like our objective is certainly getting done. I will point out, Allendale released new price projections this morning. We did lower them, actually, for the summer contracts. These will be discussed on our wrap-up commodity comments here tonight. So bottom line for cattle, we get down to our original downside target, but as I said before, we've lowered that target now for the summer contracts. Nothing bad news in the big picture here for what's going on right now in the cattle industry here. We, of course, have all those placements from the December placements. They are going to be coming due here in the next few weeks, and certainly really hitting hard in June and July. That's bearish for us. Cash cattle, we're all preparing for that type of issue. 109 bids right now, offers from 112 to 114. Last week's trade was 112. So from last week's 112, it's likely we're going to see some 111s or maybe even some 110s. So $1 to $2 lower by the end of this week. So that's a little rough here as well. Over in the hogs, a very surprising day. They led the way down, $2.22 on the June contract. That puts the June at 91.65 for today's low. Today's low, 91.65 for the June. That's actually very close to the previous low from just 2 or 3 weeks ago of 91.35. So the June looks like it's going to retest those previous lows. All other contracts, July all the way through the 2012, in fact, continued to plow lower and hit new lows for their downtrend. So certainly a rough day here for the hogs. In terms of news, obviously the trade is very concerned right now about two things. Number one, slack demand, and the second thing is, well, what do we do now that we have this slack demand and therefore rising stocks? So the trade suggesting that if weather does not improve, that we've got to work not only through these through the current demand situation, but also we have these rising stocks left over from the past few weeks of problematic issues here. So this trade may be taking things maybe a little too hard, but bottom line is that's how they traded here today. In terms of cash pork, Monday we were up $2.96. Tuesday we fell $1.29. This morning on the midday morning report, it reported hams were actually firm and bellies were steady. So if we actually don't see a pork cutout drop on this afternoon's report at 3:05 p.m., we actually may see this market rebound a little bit here going into tomorrow. We'll just have to see what this cutout does here. So overall, big deal here as far as the grains, obviously much higher. The trade doing some 180 in terms of some of its misguided perceptions. Livestock certainly lower. We certainly can validate the cattle end here, but the hog downtrend right now is certainly a question of whether that will last here. Now, if you have any questions about markets, marketing in general, or trading, feel free to give us a call here at Allendale. That's 1-800-262-7538. Thank you.